3 or 4 global brokerages had to say at the start of 2018 and how some of the model portfolios have shaped up. Today, Darshan turns his attention to another 3 and their performances or their predictions and how those predictions have performed in the calendar. Darshan, which are the 3 brokerages that you've picked up today?
Yeah, so Credit Suisse is something that we picked up. We picked up Morgan Stanley, we picked up Bank of America Merrill Lynch. So let's see what they have to say. So basically, again, Credit Suisse report was released in Jan 18, and basically they just spoke about 3 companies in which they believe investment should happen. The actual returns of the large caps that they were was a negative 7%, and they picked up leaders in the industry, and they were among the worst performers over a 5-year period, not necessarily in the near term, but if you take a look at the 5 years, these 3 companies have underperformed. Now let's take a look at which the companies they had. So L&T is something that they had to given a buy, so there they got a return of 7%. M&M is something that they gave a return of 4%, and Tata Steel is something they lost out significantly. It is down almost 33%. So that's something in which Credit Suisse lost out. So overall, the return on the portfolio on account of Tata Steel was down almost 7% in trade. So this is what Credit Suisse had to say. The other brokerage that we want to talk about is Bank of America Merrill Lynch. The report was released on 4th of December 2017. The Sensex target that they had given was 32,000. So basically, the Sensex target has been met. Basically, the theme of the entire report was they were bullish on earnings and growth that will come in, and less on multiples that they came in. The large cap returns actually for them was a negative 10%, but surprisingly, the mid cap returns gave a positive return of almost 16%. Now let's take a look at their portfolio, which were the stocks that they had recommended on 4th of December. On the large cap front, Yes Bank was something that dented their performance significantly. It was down 42%. HDFC Bank gave them decent returns. L&T gave them decent returns. NTPC was another counter which actually came in much below what the price was. ITC didn't move much. The other stocks that they had recommended and actually dented was Tata Motors. Tata Motors has been down significantly. Bharti Airtel was down in trade, and Tata Steel. So because of these 4 large counters that they had in their portfolio which they had recommended, the overall portfolio was down in trade. Among the other mid cap counters that they had recommended, these are the other large caps that they had. Surprisingly, the other big dent came in when they were negative on TCS. TCS has been a marked outperformer, and that is where they lost almost 44%. The HPCL sell call was something that they got right at this point of time. Among the mid caps that they actually had, only 3 mid caps, and they did well because of the sell call they had on SAIL and DLF, and that worked for them. Godrej Properties gave them a negative return of 6%. And finally, the last portfolio that we want to talk about is Morgan Stanley. Again, 35,700 expectation on the Sensex. They haven't been able to give positive returns this time around. Both the large cap and the mid cap portfolios have given negative returns for both for Morgan Stanley. Let's take a look at the portfolio first. Let's take a look at the large cap portfolio. What they did well was JSW Steel and Asian Paints did well. The auto names didn't work for them. Maruti and Bajaj Auto, both of them were down in trade, and that is why the portfolio turned negative. The other counters in which they lost significantly was Z, which was down 23%. HDFC Bank gave them market return. So that's the large cap portfolio. Not the best of performance. Basically just saying where it was on account of them. As far as the mid cap portfolio is concerned, Cummins India was down 8% in trade, and M&M Financial from the buy call was up 5%. So pretty much market return. But overall, if you're looking at most of the brokerages that we have covered, I think mid caps overall have not done well. The sell calls have worked well. So whichever brokerages gave sell calls or underperform calls, they have actually managed to work, and mid caps across the board have not done well. And in fact, all the brokerages, most of them have actually given subpar return as compared to the benchmark indices.